is Bloomberg Daybreak Middle East and Africa, our top stories this morning. Israel cancels a trip to Washington after the U.S. allows a Gaza ceasefire resolution to pass at the UN for the first time. Boeing shares gain after CEO Dave Calhoun says he's stepping down in a radical shake-up at the plane maker. We'll analyse what the company needs to do to restore confidence. Plus, we speak to key newsmakers from around Africa. We're joined by the CEO of the continent's biggest mobile operator, MTN, and the Africa Finance Corporation with the latest on a new loan to fund infrastructure investment. It's just gone 8 a.m. across the Emirates. I'm Vonnie Quinn in Dubai, and let's see how we're shaping up for the Tuesday session across the globe. Well, it looks like U.S. futures, at least in the early going, are pointed higher. This after the S&P 500 and the Nasdaq 100 were both down by about 0.3% yesterday. Some major moves in some strange stocks, though. Reddit, for example, had a huge move yesterday. It's up now something like 78% since its IPO. We also had a nice move in Micron, another 6.5% onto that 14% yesterday. And then you have the likes of Intel dragging on the tech sector. Brent crude just below $87 a barrel, and I felt like pointing out Bitcoin because we're back up there above $70,000 a coin, even though we're down about 0.7% in current trading. I do also want to point to this chart because it's sort of indicative of the story today. Dave Calhoun gone at the end of the year out of Boeing. This is partially the reason why. As you can see, the blue line is Airbus. It's been going just in one direction since the start of Boeing's issues and basically since the start of the pandemic. Boeing, however, on continued issues which just persisted through 2021, 22, 23, 24, finally maybe seeing some light at the end of that tunnel. All right, let's check in now on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Vonnie, we're seeing a bit more caution creep into Asia markets as the session progresses. The gauge of stocks rose as much as 0.5% earlier. But don't forget, this week we are also bracing for what we're going to get out of U.S. inflation data. And we're also approaching the end of the quarter. So Nikkei, CSI 300, Hang Seng, all very flat. The Kospi, which earlier jumped as much as 1+%, helped by the chip stocks such as SK Hynix and Samsung Electronics, thanks to Micron. We're seeing that pairing those gains as well. Let's take a look at what we're seeing in currencies. Of course, we've been keeping a really close watch on it as the PBOC last Friday, remember, shocked traders with its yuan fix. The second, or rather the past two sessions, it's been coming through with ramp-up support for the currency. That seems to be helping some stability in the markets. But if you take a look at what we're seeing onshore yuan, yuan bears don't seem terribly convinced. We are also seeing the rupee pulling away from the record lows that we reached last Friday. It's back in trading today. This is a currency that's influenced by dollar strength, as well as what we're seeing on Brent, but also yuan weakness. So that strength might be indicative of what we're seeing on the yuan as well. Vonnie.
Avril, thank you. Middle Gatecha will be joining us in just a little bit, and we'll be asking him some questions related to your report, so thank you. Israel has called off a trip to Washington by senior officials after the U.S. decided not to veto a UN resolution demanding an immediate ceasefire in Gaza. Let's get more now from Bloomberg's Dana Kreisch. How significant is the actual resolution that did pass? I mean, it's significant that a resolution passed in the first place.
Exactly, and this is the first resolution in the UN Security Council to pass and openly calling for a ceasefire in Gaza since the October 7 attacks. There have been several attempts, but these attempts have been obstructed, of course, by a veto by the United States. So the resolution itself calls for a ceasefire. It also calls for the release of all hostages. And what the U.S. is saying, why we abstained, is because it does not explicitly condemn Hamas's attack on October 7. That pretty much kicked off everything. This is quite significant because it's the first time, the world is asking collectively Israel for a ceasefire in Gaza. And of course, the U.S. abstaining from it is a first, and it is not surprising, as we kind of knew what the U.S. was heading into, given that Israel was not heeding any of its calls or listening to its demands for more restraint, more humanitarian aid into Gaza.
What is Israel signifying, though, by not sending this delegation to Washington? I mean, people are in Washington from time to time. Yoav Gallant was just there speaking with Anthony Blinken.
Exactly. Netanyahu did warn right before the Security Council vote that if the U.S. votes in favor, then he would cancel this high-level delegation. They abstained, and so he did. And this high-level delegation is quite significant because they were going to discuss alternatives to the Rafah operation. And also, this was a request by President Joe Biden, and him canceling it is kind of signifying that there is, or adding to the restraint that's already in this relationship. But for me, a rupture in this relationship completely is not yet going to happen. Israel is still the U.S.'s main and biggest ally in the region, and this long-standing relationship has actually weathered many storms before.
If they do invade Rafah, though, in some kind of major capacity, what would that do to U.S.-Israel relations?
Well, this is the big question, right? Would Israel go ahead with the Rafah operation? And the question still is, what can convince Israel not to go ahead with this? Canceling the delegation really makes it more likely that Israel would go ahead with it. I think that would add more restraint onto that, adding global international pressure on Israel in the region as well, isolating it, and you have the possibility of just mending or actually coming with normalization ties with Saudi Arabia would make it even less and less likely.
And the fascinating thing is that the resolution doesn't actually tie the ceasefire with any kind of hostage release rule or anything like that.
Exactly.
Dana, yeah, thank you so much for the context. We much appreciate it. That is Dana Kraish joining us here in Dubai. Meantime, Boeing shares closed higher after the plane maker announced a sweeping leadership overhaul. CEO Dave Calhoun is stepping down at the end of the year. Commercial planes chief Stan Deal is leaving immediately, while Chairman Larry Keller will not be standing for re-election. Let's bring in Bloomberg opinion columnist Tim Culpan. Tim, you know, it's in hindsight seems like this was an inevitable move, but yet it took a long time for this to happen, no?
Yeah, you're right. It took a long time. Not only did it take a long time, it took Boeing's own airline customers to go straight to the board and make their case. They were basically saying, look, we don't have confidence in the current executive leadership. We're your biggest customers. You need to do something about it. So it was the board that was really forced into this position. The customers bypassed the CEO and the executive leadership and forced their hand. So I think that says a lot about what's going on. The board probably could have acted quicker. They should have acted quicker. The fact that Calhoun is able to stay on until the end of the year, another 9 months, I think that is a concern. It is my personal belief that he won't actually see that out if the board, under a new chairman, Steve Mollenkopf, who previously had run Qualcomm for many years, they will be looking to replace the CEO as quickly as possible. Of course, they don't want to rush into it and get the wrong candidate. They want to make sure that the right candidate has the right approach and the right strategy. But if they can get someone new in place as quickly as possible, I think that would be the preferred outcome for everybody, for investors, for the company, and of course for airlines and the traveling public.
For sure. And then, of course, the new CEO will obviously have challenges, to say the least. But what will those challenges be?
Really, it'll come down to culture, right? So you're not going to have the CEO out on the factory floor putting bolts into airframes to make sure that doors don't fly off, although it would be very, very good for the new CEO to be seen out on the factory floor. But it'll be coming down to culture, making sure that they have the right pieces in place in terms of the way they look at safety, the way they manage the whole production process, and ensuring that every person, that the division chiefs, all are aligned with the right approach, because the new CEO is going to have to renovate the way the company does business and does their operations. There is clearly problems deep into Boeing that, of course, the MAX problem of a few years ago, now the construction problems that we've seen over the last few months, we don't even know if there's other further problems going into the future. So the new CEO will also have to dig deep to find out what else is going wrong at Boeing. So it's going to be a cultural change that's really going to be the key point for the new leadership.
Yeah, I mean, Tim, you were making the point in your first answer there, but also Richard Abalafia, who's an industry expert, was saying, the government couldn't get rid of Dave Calhoun or the other problematic people at the company. Neither could shareholders. And, it basically took the customers to point out, you've become a meme, or, your planes in our runways have become a meme, and this is not okay. Why did it take so long? I mean, does it give us any hope that Boeing can turn itself around if all of those other stakeholders weren't able to point out the obvious to Boeing?
Yeah, I mean, the cliche is that the first step to fixing a problem is recognizing you have one. Well, clearly we saw there was technical problems at Boeing, but it took a long time for the Boeing leadership to recognize that it was the executive management that was the problem, and that was really a big issue. Well, it's finally happened now, so we can look back and say it should have happened earlier. But if we want to, take a positive view of this, it has happened. There is leadership change coming, including a new chair of the board, which is a very important step. And so investors and shareholders and everybody else will hopefully believe that there is better things to come for Boeing.
Tim, thank you, because there certainly is demand. That chart that we were just looking at, it shows that there's a backlog of 13,500 planes on order from both Airbus and Boeing. Lots of demand out there. Bloomberg Asia Tech opinion columnist Tim Culpin, thank you. Still ahead, cocoa extending its surge, surpassing the $9,000 mark as a supply crunch grips the market. We'll bring you the story as the commodity becomes more expensive per tonne than copper for the first time ever. Plus, why Barclays is initiating a long position in the Norwegian and Swedish currencies as traders await the Riksbank rate decision. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. Fed Governor Lisa Cook says the U.S. central bank must be cautious in cutting interest rates. Policymakers held their meeting last week and maintained their forecast for 3 cuts this year. But the U.S. economy has continued to surprise with its strength, despite high borrowing costs.
The risks to achieving our inflation and employment goals are moving into better balance. The risk of easing monetary policy too soon or too much is that it could allow above-target inflation to become entrenched and halt the progress that we have seen.
For more now, let's bring in MLive strategist Mary Nicola. So, Mary, obviously the discussion continues now. Is it going to be 2 cuts? Is it going to be 3 cuts? And then we have these moves yesterday that sort of sent shivers down the spine of anyone looking at the markets. Reddit, for example. Even the Micron move was pretty substantial. Is this a healthy market?
So far what we've seen is that the Fed has signaled that they are likely to cut at some point, but they just need greater confidence and they need more, and it's obviously going to require some patience with what we're seeing on inflation. But what we're seeing with the equity markets is that the rally is continuing irrespective of what's happening with the Fed, and that's largely to do with the fact that we're seeing this resilience in the economy. So as long as that continues, as long as profits continue to accelerate, then the equity market should be well supported. In the meantime, of course, there's going to be some moments of respite, some moments where it takes a breather, but the underlying fundamentals will need to be strong for this rally to continue.
For sure. Now, Chris Waller is speaking Wednesday, and he's obviously somebody that we've been watching quite closely the last several months. What will the message the Fed wants to get out be?
I think it will be very similar to what we've heard from Bostic, what we've heard from Cook, and that's really about the fact that the last mile of inflation has been a little bit more arduous than probably would have been expected. So reaching that target towards 2%, and that they'll have to maintain caution. Waller tends to be on the hawkish side, so of course it's all about data dependency. So what we're going to see in core PCE at the end of the week will be quite critical in terms of what is the trajectory of inflation and how the path
path is. So for now, there's going to be an element of caution from the Fed, and that's going to be reiterated, which likely keeps, the volatility, especially over every data point, just heightens every time we see a different data point coming through.
And of course, we're getting PCE Friday, and markets will be closed in most corners of the world. So that'll be an interesting one next week. MLive strategist Mary Nicola, thank you so much for joining. Let's bring in now Mitul Kotecha, head of FX and EM Macro Strategy Asia at Barclays. Let's start with the dollar, and where we just finished, Mitul. It's obviously been quite strong post-FOMC. Do you see that continuing as this debate rages? Is it going to be 3? Is it going to be 2?
Well, look, firstly, it does feel like the Fed is itching to cut rates at the moment. When we look at what we saw at the FOMC last week, it was interesting that despite the growth and inflation forecast revisions higher, the dot plots didn't change. And I think in reality, we would have expected to see 2. And instead, we maintained 3 cuts from the Fed dot plot. So it does feel as if, and again, listening to the press conference, it does feel as if Powell and co are keen to cut rates soon, and we continue to believe a June rate cut is the most likely scenario with 3 rate cuts this year. But how much does that affect the dollar? Well, traditionally or historically, there has been some impact once the Fed starts cutting rates on the dollar. But we do think that U.S. outperformance, relative asset returns, probably greater disinflation outside of the U.S., and potential tariffs increases if there is a President Trump 2 later this year could all bode well for the dollar. So we're more constructive on the dollar for the next few months at least, before we see the Fed cut rates. And we think that U.S. outperformance will contribute to more dollar strength.
If that's the case, what does that do to EM currencies? I'm thinking of the yuan, for example, and also obviously the yen, but particularly the China currency.
Well, I think with the yuan, everyone got very excited last Friday when we saw the move through 720 and the fixing that was above 710. And the last couple of days, that's all come back down again. But it does suggest that there is clearly a view in the market that the Chinese currency should be somewhat weaker. We still see that between the basis, CNH and CNY. But again, I think if we do see a strong dollar, what we tend to have seen in the past is the strength of the dollar generally is met with more aggressive fixings from China. When the dollar weakens, you see less aggressive fixings and trade-weighted depreciation. So for now, we think the RMB on a trade-weighted basis is fairly rich. If you look at the CFETS index, we do expect some depreciation there. And of course, a stronger dollar should continue to push dollar CNY higher in our view, despite the strength of these fixings. As for dollar yen, as you mentioned, again, rate differentials are important. We only think the Bank of Japan is going to be fairly gradual with its policy tightening in the months ahead. That should continue to keep dollar yen on the front foot, in our view, with yen depreciation pressures continuing, despite the jawboning and potential threat of intervention from the MOF BOJ in Japan.
A lot to unpack there. Let's go back to the yuan for a moment. Do you see it weakening past 730 at any point soon?
Well, our forecast is actually for 730 to be hit in the next quarter. So we do see more depreciation here. But as I mentioned, that a lot does depend on the overall strength of the US dollar. I think to get through 730, you'd probably need to see a decisive shift in policy from China. And we've been recently writing about this, and we do not think that we're going to see a step devaluation of the currency, but we do expect to see some gradual depreciation. So it's unlikely that we break through 730 unless China forcibly decides that they need a weak currency to boost the economy. And I think that's unlikely. All the analysis we've done suggests depreciation of the CNY is going to do little for ending the deflationary pressures, nor will it do much for boosting exports and trade. So again, gradual depreciation, 730 probably seems likely in our view.
And then on the yen, Mitul, you said the rate hike obviously was no solace for the yen and it's going to continue its depreciation as well. Where do you see that, and at what point will the government need to step in?
Well, I think for now, given that strength of the dollar, it looks like we're going to stay on the north of 150 and beyond. intervention will really depend on when we get through big levels. And again, we've got no official level in sight. But you'd imagine that once we start breaking through big levels such as 155 or 160, for instance, you'd see more of an aggressive stance from the Japanese authorities. One thing to keep an eye out on is overall level of volatility. If volatility is quite low, perhaps the incentive to intervene will be less so. And there's every sense that a weaker currency is also beneficial for the Japanese economy, especially given this pivot towards more high-tech manufacturing and export. So, again, it's not obvious when we see intervention, but I suspect we will see more aggressive jawboning as dollar-yen moves higher.
Middle, what's the geopolitical risk that puts FX markets at their most vulnerable right now?
Well, it's interesting that geopolitics has just had very, very limited impact on FX. I mean, when we look at market vol, and I would say the same for volatility in most markets, but when we look at Ukraine and Russia and the events in the Middle East, there's been very, very limited impact on FX. Now, of course, that could change very quickly if in November we see President Trump in a second term and he decides to put these tariffs that he's talked about on China, 60% tariffs, 10% tariffs on the rest of the world. That could have some significant implications. And of course, his policies towards Taiwan and China and Russia will all be very important. And if anything, the risks are we could see an uptick in volatility and geopolitics could therefore become more important from an FX market perspective.
Certainly, conversations we'll be having. It's a long year ahead. Thank you, Middle. Much appreciate your time today. That's Middle Kotecha, the head of Foreign Exchange and Macro Strategy Asia at Barclays. Plenty more is still ahead. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Vonnie Quinn in Dubai. Let's get you some of the other stories we're following. The US and UK are accusing state-backed Chinese hackers of a years-long campaign targeting politicians and companies. Both countries have announced sanctions against 2 individuals, as well as a company in Wuhan that Washington alleges was a front for malicious cyber operations. The UK also says China accessed details of some 40 million voters held by the country's electoral commission. Troubled electric car maker Lucid is getting a $1 billion cash injection from its biggest investor, an affiliate of Saudi Arabia's Public Investment Fund. The US company says the new financing will be partly used for capital expenditure and as working capital. Lucid shares gained some 6% yesterday, though they're still down by almost a third so far this year. Let's take a look at where we stand futures-wise. Well, it looks to be a day that might actually start off in the green. This after the major indices in the US were down yesterday. The S&P and Nasdaq 100 down by 0.33% apiece. So we have Dow, S&P and Nasdaq futures higher, Euro Stoxx 50 futures lower. Quick look at a Treasuries board now as well. We'll see where we stand on the yield curve. We look to be down by another few basis points in the session. This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Israel cancels a trip to Washington after the US allows a Gaza ceasefire resolution to pass at the United Nations for the first time. Boeing shares gain after CEO Dave Calhoun says he's stepping down in a radical shake-up at the plane maker. We'll analyse what the company needs to do to restore confidence. Plus, we speak to key newsmakers from around Africa. We'll bring you our interview with the CEO of the continent's biggest mobile operator, MTN, and the Africa Finance Corporation with the latest on a new loan to fund infrastructure investment. It's just gone 8:30 a.m. across the Emirates. I'm Vonnie Quinn in Dubai, and let's take a look at how markets are shaping up for the Tuesday session. This after a kind of a meh session in the United States. Yesterday we had the S&P and the Nasdaq 100 down about 0.33% apiece, but that belies some of the churn underneath the surface, because boy was there some churn in some odd stocks. Reddit, for example, had a 30% gain, this after having a very volatile few sessions since its IPO and the day that it started trading last Thursday, but now it's up something like 78% since then. We also had a big move for Micron, that after the huge move last Thursday of 14%, it was up 6.5% yesterday. And then weakness for the likes of Intel. So it was really a tale of very different markets yesterday. Today, it looks like S&P futures and Dow futures are at least pointed to a higher open for the US indices. Not the case for the Euro Stoxx 50, let me point that out. It is still early going, though. Brent crude trading just under $87 a barrel, but we have seen that strength come back into that market just a little bit. And then Bitcoin let rip once again. A couple of sessions ago, we were at 63,000 and change. Now we're above 70,000 a coin, and that's even down 0.5%. So we're off our just most recent highs for Bitcoin. But again, it's definitely one to be watching. Let's take a closer look with this chart at the story that's behind Boeing and Airbus. So obviously, this has been going on for many years now with Boeing. It's had a problem for several years since the pandemic, and then it never recovered because of the accidents that just continually kept happening. And as you can see, the share price of both companies have completely diverged. So Boeing plummeted, and I hate to use that word, at the pandemic time, and it's really still down in the depths. It's down something like 26% this year alone. Airbus, though, once it started to recover, it continued to recover, and it has had a gain of more than 20% this year as well. We're going to be talking more about the Boeing story in just a moment. And in fact, this is the move that we saw yesterday after that Dave Calhoun announcement. It was up 1.4%. So a little bit of a trepidatious optimism, I would say, from investors. After all, if you think about it, investors weren't able to get this done. Shareholders weren't able to get this done. The government wasn't able to get this done. Even board members weren't able to get this done. It actually took customers of Boeing to come to the board and say, you've got to help us. The aircraft on our runways right now are memes across the internet. Well, again, we'll come back to that story in a moment. But first, let's get to Asia and check in on how markets there are faring with Avril Hong in Singapore. Avril.
Yeah, Bonnie, we're taking a look at the Asian currencies. As we wait for US data later in the week, we're seeing a story of dollar resilience. That's going to mean pressure for the likes of the yuan and the Japanese yen. Today, though, we're seeing how the PBOC fix is supporting offshore renminbi, although if you're looking at the situation onshore, it's a sign of weakness. Maybe the yuan bears aren't terribly convinced after getting spooked by the PBOC last Friday. We're also seeing the Japanese currency been trading in pretty tight ranges as there's all this intervention chatter. So that's keeping a floor on the currency. India, the rupee has been in focus. This is against the backdrop of dollar strength, Brent also moving higher, but also how the yuan has been weakening. So that's putting a bit of pressure on the Indian rupee, although it's pulled back in trading today. Now let's flip the board and take a look at what we're seeing in Japanese stocks, because we talk so much about the Japanese yen's impact on equities. I thought I'd just recap what we're seeing. The topics versus the S&P 500, there's been outperformance, 17% higher so far this year on the topics versus the US counterpart, about 10%. And we have seen how the yuan, or the Japanese yen dynamics, I should say, could curtail the performance on some of these export-facing companies as we potentially see some of the markets expecting BOJ rate raises. But it's worth noting here that if you take a look at some of the domestic-facing stocks, they're expected to do well if we see wage increases and better purchasing power among consumers. So that could mean that Japanese equities continue outperforming, especially in an environment where for the S&P 500 and US equities is really about whether we see profit acceleration, especially given these lofty valuations in US stocks. Bonnie.
Oh, for sure. Definitely lofty. Avril, thank you so much. That's Avril Hong there in Singapore. Speaking of lofty, cocoa has exceeded $9,000 for the first time ever as global supply shortages grip the market and chocolate makers grapple for beans. Yesterday alone, futures gained $700 per tonne, climbing for a fourth straight day. For more on this, Bloomberg's Ondiro Oganga joins us now from Johannesburg. So, Ondiro, what is driving the historic high in cocoa prices?
Vonnie, we are seeing historic shortage of cocoa beans hit the market. For example, Ghana is expected to record 650 to about 700,000 tons by September when they close this season. And this is literally down from the expected forecast of about 850,000. If we look at Ivory Coast, they've also said they're expecting a shrinkage in the mid-crop season. And this is what the market was looking forward to help boost cocoa supply because the shortage is biting. And a couple of reasons are behind this shortage that has hit the market. One, adverse weather conditions. We've seen climate change in areas like Ghana and Ivory Coast. Rainfall season delayed, and when it came, it was heavy rainfall. We saw the farms flooding, and when the high temperatures came, they were extremely high, affecting the farms. Ghana has also had financial challenges, and so the government was unable to subsidize fertilizer, and farmers did not have access to adequate fertilizer, and this affected production of cocoa. And more shortages incoming because European rules have changed, and they're going to stop cocoa that destroys the forest to hit the shelves. Also, they're trying to weed out child labor in the cocoa production value chain, and this is going to affect majority of cocoa farms.
Wow, so it seems like these high prices aren't even really benefiting the farmers. What do those changes that you mentioned in the international markets mean for Ghana?
It's not good news for Ghana, Vonnie, because one would assume that if cocoa prices are going up, then the farmers should be able to reap the benefit. But it's actually the contrast. If we just put it into the context of the farmers, many of them, their income has significantly reduced because of how much output has reduced. And remember, Ghana, they sell their cocoa to the government, Ghana Cocoa Board, and the prices are fixed at the beginning of the season. So farmers are not able to enjoy the good prices, the increasing cocoa prices at the international market. This has also affected Ghana because now farmers are opting to smuggle their cocoa to other countries and sell them to other countries in order to reap some benefit. And that also means that the money that goes to the Ghanaian government is way less. The government is also expected to take a hit here because cocoa is the third largest FX earner in Ghana. And because output is significantly reducing, earnings from cocoa have dropped by about a third to 508.4 million. What this means is that the cedi is not buffered because the country will not have enough FX reserves. And this is a currency that has lost nearly 8.3% of its value to the dollar this year alone.
Yeah, I'm just looking at the statistics, Ondiro, and CPI year over year is above 23% in Ghana. GDP year over year, 3.8%. You know, so GDP growth is still pretty strong, but it's not an economy that can really handle major changes in sort of what it's receiving for its exports, for example. Where is the money going that we're seeing for higher cocoa prices?
I think one of the things we need to remember, Vonnie, is the fact that Ghana is just recovering from a very tumultuous time that it has gone through. In 2021 and 2022 were really tough years for this country. We saw the currency lose over 60% of its value to the dollar. Debt to GDP hit over 80%. And we also saw that they defaulted on their debt later on. And so this is a country that has gone through a really difficult economic time. Inflation in 2022 hit a record high of 54%. So this is a country that is gradually walking back towards recovery. And the money that they're getting is actually not enough to sustain them. Also important to remember that Ghana is a heavy import country. And so the little that they get, they use it in importing, and not just consumable, but also heavy machinery, which takes a lot out of their budget.
That's for sure. The Bank of Ghana interest rate now at 29%. Ondiro, thank you so much for all of the context. We'll continue to follow the story closely. That's Bloomberg's Ondiro Oganga. Africa's largest mobile carrier, meanwhile, MTN, has reported its biggest drop in profit in at least 30 years in the wake of the devaluation of Nigeria's naira. Despite this, the company is seeking a new round of investments in its fintech business. Speaking to my co-anchor, Jennifer Zapasaja, the CEO says this is a lucrative and fast-growing space.
We anticipate that inflation will remain at slightly elevated levels. Just given where global inflation developments are. So we don't think that we are going to see inflation moderating fast. And then on currencies, I think the naira uncertainty we spoke about has been pleasing to see in a market like Ghana, that we're starting to see inflation come down and the cedi becoming a lot more stable. So that uncertainty is much more about the continent more general. We do have elections in South Africa. We have elections in Rwanda and also in Ghana. So three of our key markets have elections. But within the context of elections ongoing, we think the investment case remains very robust. The demand for data and fintech services remains very, very strong when you see the underlying traffic growth that we're seeing in these markets. So we will work to navigate any kind of the geopolitical context that we're operating in, over the next 12 months.
And that was the MTN CEO speaking to my co-anchor, Jennifer Zapasaja, who'll be joining in less than 20 minutes. So stick around. Plenty more still ahead. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. Egypt's government has declared the country's economy has been saved after a record investment from the UAE and others. But Egyptians are bracing for more hardship as prices keep rising following the latest currency devaluation. Let's get more from Bloomberg's Paul Wallace. So investors have widely praised, Paul, Egypt's devaluation and other reforms, but it doesn't seem to be that great for Egyptians themselves.
I think this was always going to be the problem for Egypt. From a macroeconomic point of view, it was a no-brainer that they needed to devalue. Their currency was hugely overvalued. They had a huge shortage of foreign exchange that was causing havoc for businesses and the government itself. But the government also knew that any devaluation would probably put up inflation even more, at least in the short term. And we're talking about a country that already has inflation of about 35%. So in the short term, it was always going to cause some hardship for Egyptians, and we're seeing that already. There is a dire cost of living crisis in the country, and it's hitting not just poor Egyptians, but also middle-class Egyptians too. And a report we had yesterday showcases how Egyptians across the country and across the board in terms of their income are having to do things like scrimp on food, especially meats, and all sorts of other things like holidays and so on and so forth.
That meat anecdote was grim. It talked about butchers essentially making the lot size of the meats that they sell much, much smaller because people just weren't able to buy the cuts that they normally can buy or the size of cuts that they normally can buy. How long does this continue, Paul?
That is the big question, and a lot of Egyptians fear this is going to be a long-term problem. The government itself, as you've already said, claims that the crisis is over now and that it's reached a turning point. In fairness to the government, that might well be true. The scale of the investments that we've seen from the UAE, from investments in lending from the UAE, from the IMF, the World Bank, the EU, are huge. We're talking about more than $50 billion. So I think already the FX crisis is over. No longer does the country have a shortage of foreign exchange, and that should help massively. In some ways, it might actually help to reduce inflationary pressures because a lot of Egyptians were already working on the black market rate. And the black market exchange rate has actually appreciated a bit since all these investments came in the past months. So there is a silver lining. I think it's probably going to take at least a year for inflation to slow down to, let's say, single-digit levels and maybe more. But certainly, for all that Egypt might have reached a turning point, there's still many months ahead of pain for ordinary people there.
Right, and for the ordinary people, El-Sisi had already been reducing, subsidies on bread and electricity and things like that. He's obviously not concerned that it's going to backfire on him. How much will the suffering be borne by these people, and will they take it without revolting?
So far they have, and I think it's important to note that Egypt is a very autocratic country. The government brooks almost no dissent whatsoever. So there's been almost nothing in the way of protests. And they have just had elections. They had elections in December, which President Sisi won easily to extend his rule. So the government is certainly wary about social tensions, and it has done things in recent months to help ameliorate people's economic positions. It's raised the minimum wage, for example. Some poor Egyptians are getting more handouts to make up for a loss of subsidies on things like bread and other foods. So the government is by no means totally it doesn't ignore the plight of its people, but I think it's fair to say that the chances of widespread social unrest are pretty low at this point.
Paul, thank you. I'd urge everybody to read the story. It is a fascinating read. A little bit grim, I have to say, but it seems like there might be some light at the end of the tunnel, at least for now. Paul Wallace there in Dubai with me. Thank you. Plenty more still ahead. This is Bloomberg Middle East and Africa. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Bonnie Quinn in Dubai. SpaceX's Starlink touts its high-speed internet as, quote, available almost anywhere on Earth. But its effectiveness as a communications tool is making the satellite internet service a target for a growing black market trade around the world. Let's get more from Bloomberg's Lonnie Prinsloo. It's a fascinating story, Lonnie. What is behind the growing black market for Starlink kits?
Hi, Bonnie. So basically, it's the effectiveness of this communication tool that's making it so popular and a target for the black market. So what we are seeing is the increased trade of these kits going across borders into countries with repressive governments, into war-torn sort of zones, and even just into countries where you have sanctioned internet or where it's difficult to access the internet.
And I mean, technically, and as you point out in the big take, all of these transistors are traceable, right? So technically, we should know where they all are. At least Elon Musk and Starlink should know where they all are. Why is the use of Starlink a problem? Where is it particularly taking off?
Yeah, so it's not really the use of it as the problem. It's sort of the bad actors that we're seeing that's using the kits that are a problem in some areas. So, for instance, in Sudan, in North Africa, we are seeing that the internet has been cut for ordinary citizens, and meanwhile, paramilitary groups are using these kits to translate or communicate their sort of logistics and needs. And also, we've seen in the Russia-Ukraine war, we've seen both sides use these kits. We have seen the Ukraine sort of first using the kits, and then saying Russian soldiers are also using these kits. To which Musk said, listen, we haven't sold directly or indirectly to Russia. But, of course, we've seen the images of these kits being packed out by Russian soldiers. Again, SpaceX told Israeli officials that they are able to geolocate the terminals and they can cut it off when used illegally, according to one of their officials. But we are still seeing bad actors sort of using these kits, so we don't know how closely this monitoring of these kits are taking place and how often they actually do get cut off when used illegally.
Yeah, exactly. Is there anything that distributors themselves, Starlink distributors, can do to try and curb the growth of that black market?
So we have spoken to some of the distributors, and what they are saying is they verify their customers, and when customers are not verified, or when they see that the large-scale sort of trading of these kits are taking place, or that people are buying a lot of them in bulk, they sort of can cancel the sale of the kits. So that is happening to some extent, but we don't know to what extent, and there's always the second-hand sales of these kits. And ultimately, the control of and monitoring of the kits does lie in the hands of the company, in the hands of Starlink.
Yeah, it's to be continued, I think, but it's a wonderful big take today, and I'd urge everybody to read it. Bloomberg's Lonnie Prinsloo in Johannesburg. Thank you. Apple, Alphabet, Google and Meta risk large potential fines as the European Union launches investigations into their compliance with strict new digital laws. The bloc is looking into Apple and Google's App Store rules under its Digital Markets Act, as well as new Instagram and Facebook fees. EU antitrust chief Margrethe Vestager says the firms face potential fines of up to 20% of their global revenue for repeated breaches.
These are serious cases. We've been able to solve that with merely a discussion. It would have been resolved by now. So we open for good reasons, because we find that if this, in inverted commas, compliance solutions, if they persist, then consumers will not have the choice that they were promised by the Digital Markets Act. Gatekeepers can no longer prevent businesses from informing their users within the app about cheaper app options outside of the gatekeeper's ecosystem. That is called anti-steering and is now forbidden by law. The way that Apple and Alphabet implemented the DMA rules on anti-steering seems to be at odds with the letter of the law.
EU Antitrust Commissioner Margrethe Vestager there. Let's take a look at futures. So in the US, it looks like we are pointed higher. In Europe, we are pointed lower for now. We're still in the early going. It was a down day in the US yesterday, but not by much, about 0.3%. And Bitcoin, well, it's still trading above $70,000 a coin. Plenty more ahead. Jen Zabazaja joins.
This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Israel cancels a trip to Washington after the U.S. allows a Gaza ceasefire resolution to pass at the UN for the first time.
Boeing shares gain after CEO Dave Calhoun says he's stepping down in a radical shake-up at the plane maker. We'll analyse what the company needs to do to restore confidence.
Plus, we speak to key newsmakers from around the African continent. We're joined by the CEO of the continent's biggest mobile operator, MTN, and the Africa Finance Corporation with the latest on a new loan to fund infrastructure investment. It is just past 9 a.m. across the Emirates, 7 a.m. here in Johannesburg. I'm Jennifer Zapasaja.
And I'm Bonnie Quinn in Dubai. Let's take a quick look at where we stand as we head into the Tuesday market session. We were down in the United States in the Monday session by about 1/3% apiece for the S&P and the Nasdaq 100. Looks like we might be turning that around today, obviously several hours away, and that's not the case for European futures. Brent crude trading just above $86.50 a barrel. So there is a little bit of strength coming back into the Brent market. And Bitcoin, even though it's down 0.5%, it's been obviously trading, constantly for the last 24 hours. It's above $70,500 a coin, which is quite stunning, having been down at 63,000 just a couple of sessions ago. Let's take a look at this chart, though, because it relates to Boeing. And obviously, we saw the stock up about 1.3, 1.4% yesterday after Dave Calhoun is going to be gone by the end of the year, according to the company and Calhoun himself. It's sort of a picture of two companies, Airbus and Boeing. Airbus has just been going from strength to strength since it started to recover post-pandemic. Boeing has been basically in the toilet ever since. Shares down just this year alone about 26%, even as Airbus's rise about 22%, Jen.
Yeah, Vonnie, a fascinating story there that we're going to pay close attention to. Look, I'm looking very closely at what commodities are doing because they are back in the spotlight. Well, actually more in the spotlight now than we've seen in the past. And in particular, if we take a look at where gold is right now, it's relatively steady. It's saying it's unchanged, of course, right there, but it's still holding near a record high right now. The gold spot index at about $2,171 there. Also, iron ore seeing some downside today, as you can see there, which is extending a stretch of volatility for the commodity. Right now, we're seeing iron ore at about 105.85, but this is largely the result of deepening anxiety over Chinese demand. There's a look at gold again. Gold still nearing its record highs, but if we talk about iron ore, base metals are also seeing some downside, and a lot of this is largely due to these concerns around construction activity in China and whether or not they will pick up. All right, let's go to our markets in Asia and see how they're faring. Avril Hong is in our Singapore studio for more on that. Hey, Avril.
Hey, Jen. Yeah, we're seeing a bit of caution creeping into the markets as the session progresses. It's, a time where we're heading into the end of the quarter. We also have U.S. data coming up. So not that much conviction going around this part of the session. We also had today, despite that bit of certainty, I think, being injected into markets by the PBOC with the yuan fix, signaling in a way that they're still going to keep up support for the Chinese currency. Despite all this, you can see how the Chinese benchmarks are faring. The Nikkei is also lower. The outperformer is the South Korean Kospi. That's lifted by the chip stocks. Now let's take a look at the EV-related complex, because we're seeing the drag today from Nissan on the Nikkei declining by the most in about 6 weeks after it unveiled this aggressive plan, including plans for electrified vehicles. Its CEO says it wants to compete with the likes of BYD, and those plans don't seem to be cheered on by investors. BYD, CATL, they report their earnings also, so that's a bit of a boost that we're seeing ahead of that. Of course, the battery maker has said that it has those expansion plans still, even in the face of slowing sales on EVs, and that's what we're seeing among the Asia transport-related stocks today. Guys.
Avril, thank you so much. That's Avril Hong there in Singapore. So Boeing shares closed higher after the plane maker announced a sweeping leadership overhaul. CEO Dave Calhoun is stepping down at the end of the year. Commercial Planes chief Stan Deal is leaving immediately, while Chairman Larry Keller will not be standing for re-election. It's going to be a total clean house. For more, let's bring in Bloomberg opinion columnist Tim Culpen. Tim, was this inevitable?
Well, I guess it was inevitable at some point in time. It really came down to when it would happen. It was increasingly clear that Calhoun's tenure at the company couldn't last. But it is interesting that he gets to stay on for another 9 months to the end of the year. I believe, in fact, that he would probably depart before then. The key is that the new board, with the new chairman, Steve Mollenkopf, will be wanting to fill that role as quickly as possible, but they won't want to rush into it. They need to get the right candidate. Calhoun was only in that role for about 4 or 5 years, having come in to help fix problems at the company after the MAX crisis of about 4 or 5 years ago. And of course, he didn't really fix that problem. He did to an extent, but there were other problems popped up. So I do believe that Calhoun probably could depart even before the end of the year. I have no inside information on that. That's just my belief. But the key really is that we are seeing, and we saw this in the somewhat emotional reaction in Boeing shares, is that people believe that there is a turnaround ahead. And really, that's what is needed.
And Tim, I mean, the challenges for Boeing have been well documented. We've covered it extensively on the show. But what would you say are sort of the top of the list for what this new CEO is going to have to tackle quickly?
It'll come down to culture, company culture, the way they build their products, the way they design their products, the whole way that they check safety, they check that, bolts are bolted on, things like that. Because if you have one problem, then you can kind of excuse it and it might be an oops, but there is just such a series of problems at Boeing that you can only conclude that the way they go about manufacturing, designing and building planes and the way they have their safety checks and procedures are problematic. And so that is really a company culture thing, and that's what the new CEO under the new chairman need to look at first of all. Once that kind of company culture is built in, maybe it means changing the structure of the company or reinvigorating some of the divisions, but once that comes in, everything else should follow theoretically quite easy. Of course, it won't actually be easy, but it should flow from a change in the way the company does its business.
Tim, thank you. That's Bloomberg Asia tech opinion columnist Tim Culpin there from Taipei. Israel has called off a trip to Washington by senior officials after the U.S. decided not to veto a UN resolution demanding an immediate ceasefire in Gaza. Let's get more from Bloomberg's Dana Kreisch. So, Dana, how significant was the resolution that actually passed? What might it potentially achieve?
It is quite significant, as this is the first time that the UN Security Council actually passes a resolution related to this war and demanding a ceasefire since the war began on Gaza and since the Hamas attack. Now, it calls for a ceasefire and separately calls for the release of all hostages. The U.S. did not veto, as it had done before in the Security Council on several resolutions, but it abstained, making it easier for of course, the resolution to pass. The U.S. said that the resolution did not explicitly condemn the Hamas attack, and that's why they abstained from the vote. Now, this is quite significant also for this relationship between Israel and the U.S. that's been strained and since a couple of months back, and as Israel gears up to invade Rafah and that operation.
Yeah, Donna, dig into that a little bit more. Where does this actually leave relations, especially between Biden and Netanyahu, who have a very long history together?
Indeed. This is the latest public rift between the two, and it just shows how under pressure and strained the relationship has become. But to say that this could rupture the relationship between Israel and the U.S. is quite far-fetched. Israel is the U.S.'s most significant and oldest ally in the region, and this long-standing relationship has weathered many storms before. But for Netanyahu and Biden, this is the second or third time that they go publicly and criticize each other, and this is likely to continue and probably worsen if Israel intends or starts the operation in Rafah.
What's likely to be the next step? It does appear that a Rafah invasion is going to happen. President Biden also needs voters. He needs his Michigan voters and he needs other young voters that are very unhappy with how he's handling all of this. Is there a stalemate?
There is a stalemate, I believe, and it is hard to see how the U.S. can convince Israel to back down from its Rafah operation. Although they did cancel the delegation's visit. It was supposed to be a high-level delegation to the U.S. for the U.S. and Israel to discuss alternatives to the Rafah operation. But like I said, it is hard to imagine what could convince Israel to back down from that operation. Now, the defense minister is in Washington and had met with Blinken yesterday, and they both discussed the Rafah operation. But for now, it is a stalemate on the Rafah operation and the ceasefire talks that are still ongoing in Qatar.
Yeah, definitely in the middle of Ramadan. Bloomberg's Dana Kreisch. Dana, thanks so much for joining us and giving us that update there. All right, still ahead, Africa Finance Corporation is set to announce its biggest ever loan from a UAE-led syndication of banks. We're going to get the details from the CEO later in the hour. But up first, Fed Governor Lisa Cook says the U.S. Central Bank must be cautious in cutting interest rates. We speak to RBC Brewin Dolphin about their investment strategy next. Stick with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Fed Governor Lisa Cook says the U.S. Central Bank must be cautious in cutting interest rates. Policymakers held at their meeting last week and maintained their forecast for 3 cuts this year. But the U.S. economy has continued to surprise with its strength despite high borrowing costs.
The risks to achieving our inflation and employment goals are moving into better balance. The risk of easing monetary policy too soon or too much is that it could allow above-target inflation to become entrenched and halt the progress that we have seen.
For more on this, let's bring in MLive strategist Mark Cranfield. So, Mark, we're getting a lot of Fed speak after the Federal Reserve held last week. How are you interpreting each of these? I mean, we heard Lisa Cook there. We also heard from Raphael Bostic, Austin Goolby. How are you sort of assessing all of this rhetoric that we're hearing?
Well, it was just a week ago that bond traders were very optimistic. They wanted to hear all the dovish noises that came out of the Fed statement and from Jerome Powell's press conference afterwards, and yet already we're beginning to see some pushback from the Fed speakers, as you just mentioned, from Bostic, from Cook. And it looks as though the kind of fractious state within the Federal Reserve, some people looking for 3 cuts, some 2, some only 1, as Mr. Bostic said, is still there. So even though the Fed did keep the dot plots in place, that potential for 3 interest rate cuts this year, it looks like it's going to be very hard to achieve. Because as time progresses, as we get closer to the middle of the year, they will have to review that anyway. It's going to be pretty hard to fit in 3 interest rate cuts if the data continues to be as strong as it has been recently. And bond traders are now beginning to think, well, maybe we got a little bit carried away on pushing yields down. We've got some very big data this week. At the end of the week especially, we've got this PCE number, which the Fed is very keen on seeing. Now, if any of that data suggests that inflation is still not meeting the Fed's target quickly enough, we could get quite a sell-off in the bond market. And that is partly why you're seeing strength in the US dollar, a bit of caution in the equity market as well. So really, it's a bit of a rethink. Was the Fed really as dovish last week as they sounded?
And if we do that volatility in the bond market's going to be next week because it's going to be closed on Friday. It's so fascinating. MLive strategist Mark Cranfield, thank you for joining. Well, joining us now is Janet Mui, who's head of market analysis at RBC Brewin Dolphin. Janet, do you agree with Mark that it's going to be a fascinating Friday and into next week, and we might even see another repricing of the yield curve?
Hi, good morning, Bonnie. Thanks for having me. I do think that the market expectation of rate cuts is getting more in line with what the Fed is projecting. Obviously, that can all change, and the Fed can also revise their expectation. But I think the risk of a market wobble actually has diminished because of how close the Fed and the market are. So I do think that markets actually have already digested the possibility that there may not be as many cuts as possible. I mean, we have seen that before, right? I think there were some market participants that were saying we may not get any cuts at all this year, potentially. You just never know. But I think markets have been grinding higher still, which is boosted by the fact that the economy has remained resilient and inflation is heading in the right direction. So I think the prime condition for the markets to continue to rally is that U.S. data comes in okay, not too hot, hopefully, and also inflation continues to head in the right direction.
Janet, where do you sit then on terms of rate cuts? Because we have heard a range of different expectations. Where do you sit?
Well, so I think before the Fed's new dot plot, we were thinking it could be a bit difficult to reach 3 rate cuts because of the strength of the economic data. But I think after the Fed's new dot plot, I think they reiterated the potential for that. And I think so far, we tend to follow the guidance. Of course, as I said, they may as well revise it mid-year. But so far, our expectation is also 3 cuts.
Now, Janet, you had been overweight U.S. equities and you particularly favoured semiconductors, been right where the market has been for a long time. Have you any thoughts about perhaps maybe now it's time to start wrapping up that trade anytime soon?
Hi, Bonnie, not yet. Our view is basically based on the both the intersection of cyclical upswing of chips demand and also the structural boost by artificial intelligence. So I think that trade, that view, I think it should be at least 2 years long, because what we see, we have equity analysts looking at these inventory data, the new orders, etc. We are just at the beginning of that cyclical upswing, and there's going to be huge demand boost for semiconductors and related services, IP, storage, memory, foundry, etc. With this AI boom. We're at the early stages, and we believe with all the upgrades and the increased capacity of the data center, etc., this trade should last longer than giving up now.
Janet, are you broadening out outside of U.S. equities?
Well, to be fair, not at the moment, actually. We are overweight in the U.S., and that's really the only overweight across our regional allocation. Otherwise, we are pretty neutral, and particularly a bit negative on China still. I think less negative than before, given that growth has hit target and there are stimulus measures coming in, and of course, valuations is very low. Otherwise, we're pretty neutral. I think the best opportunities right now is still going to be U.S. equities, particularly because of the fact that it is a region that is very highly exposed to artificial intelligence and the entire value chain of the semiconductor sector.
Janet, how are you hedging, though? I mean, you're not 100% exposed to the U.S. and to semiconductors, I presume, right? You do have some hedges on there, or at least parts of the... No?
No, I mean, as in, of course, we're very diversified in terms of our portfolios.
So where?
We do have hedges. I mean, the thing is, we also have a long energy trade in general, and that I think that kind of old economy trade would act as a hedge to the newer economy trade. And we also, we think that the energy majors, for example, of course, higher oil prices would be great for them, great for the profits, but we actually don't see it as a precondition. We think that actually over the years, the reduction in investment makes the supply actually vulnerable. And also, they have been improving their corporate balance sheet. They've been returning cash to shareholders, etc. So we actually have another trade, which is a long energy.
Janet, you said you're still negative on China, but less negative than before. We're going to get some data out of China this week. Will any of it potentially change your sentiment on equities there and on the market there?
To be honest with you, probably not. I think that is a very structural view. We think the regulatory outlook environment remains very uncertain, and that probably makes investment in the region, and also in terms of the corporate strategy, it makes it entirely difficult for companies to plan, and that would affect their optimal capital allocation. So I think that is a primary problem. In fact, I think if data continues to play out, we would prefer to access it via European equities. I mean, there are some great European companies highly exposed to China, and UK companies, for example, the miners, the energy companies, as I mentioned, those would be beneficiary of a China recovery. So I think we'll be focusing more on those trades instead of directly allocating to China.
Really fascinating. Janet Mui, Head of Market Analysis at RBC Brewin Dolphin. Janet, thanks so much for getting up early and joining us there this morning. All right, plenty more still ahead. Stick with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Let's get you some of the other stories that we are following this morning. Starting off with the U.S. and U.K., they're accusing state-backed Chinese hackers of a years-long campaign targeting politicians and companies. Both countries have announced sanctions against 2 individuals, as well as a company in Wuhan that Washington alleges was a front for malicious cyber operations. The UK also says China accessed details of some 40 million voters held by the country's electoral commission. Also, troubled electric car maker Lucid is getting a $1 billion cash injunction from its biggest investor, an affiliate of Saudi Arabia's Public Investment Fund. The U.S. company says the new financing will be partly used for capital expenditure and as working capital. Lucid shares gained some 6% yesterday, though they're still down by almost a third so far this year.
Donald Trump's wealth has rocketed after his social media company, Trump Media and Technology, wrapped up a 29-month-long merger process, meaning shares in the group are now officially his. The process sees the former president's assets rise by more than $4 billion to $6.5 billion. He can't sell, though, for at least 6 months, should he wish to. WeWork co-founder and former CEO Adam Neumann has reportedly offered to buy the company for more than $500 million. According to the Wall Street Journal's sources, it's unclear how Neumann would finance a deal, which comes 5 years after he was ousted by the board. WeWork is undergoing restructuring efforts to emerge from bankruptcy in the second quarter. All right, let's take a look at markets and how we're shaping up now for the Tuesday session. It is a holiday-shortened trading week, we should mention. There is a holiday Friday in most markets, a Good Friday holiday, and then approach to Easter. S&P futures look to be pointed higher and strengthening as we head through the hour. Same with Nasdaq 100 futures. Of course, it was a down day for both of those indices yesterday by about 1/3%. Dow futures up as well. Euro Stoxx 50 futures, though, that's not as pretty a picture. They are pointed lower. We'll get those opens in just a couple of hours. Now, let's have a look at some other asset classes. We can tell that Bitcoin is holding on to many of its gains. It is down for about the last hour or so, but still above $70,000 a coin. And Ether as well is higher. This is Bloomberg.
This is Bloomberg Daybreak Middle East and Africa. Our top stories this morning. Israel cancels a trip to Washington after the U.S. allows a Gaza ceasefire resolution to pass at the UN for the first time ever.
Boeing shares gain after CEO Dave Calhoun says he's stepping down in a radical shakeup at the plane maker. We'll analyze what the company needs to do to restore confidence.
Plus, we speak with key newsmakers from around the African continent. We're joined by the CEO of the continent's biggest mobile operator, MTN, and also the Africa Finance Corporation with the latest on a new loan to fund infrastructure investment. All of that is coming up, but right now it is just past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. I'm Jennifer Zabasadja.
And I'm Bonnie Quinn in Dubai, and we are shaping up for a positive session in the United States after a negative one for the most part in the Monday session. We are hours away, obviously, but the S&P 500 and Nasdaq 100, they were both down about 1/3% yesterday. Several stocks, though, made big moves, including the likes of Reddit, which was up another 30% in yesterday's session. As you can see, Brent crude has turned green. It's turned positive, now trading very close to $87 a barrel again. And Bitcoin is still only down about 0.9%. It is trading, though, above $70,000 a coin. Quick look at a chart that compares Boeing and Airbus, because, of course, finally, Boeing has capitulated and Dave Calhoun is out. It's a bit of a clean sweep, actually, across the board. But, you know, this is why, and it's taken a long time for Boeing to take this kind of action. Shares in the pandemic, shares since the pandemic. Airbus, it's just been all up and to the right. Boeing, it's really just gone absolutely nowhere. In fact, this year it's down more than 26%, Jen.
Yeah, Bonnie, and we're paying close attention to that story. Look, I'm taking a close look at what commodities are doing because they're in the spotlight this morning more than we're typically used to them. So let's just take a look at where gold is at right now. Largely unchanged, but the price there about $2,172, just above that. We've seen the price of gold pull back slightly from highs that we saw last week, but still the gains there that we're seeing with bullion indicating that investors are still potentially a little bit cautious ahead of the PCE data from the U.S. that is coming on Friday. Meanwhile, we're also taking a look at iron ore because iron ore is seeing some downside today, right now at about $105.40 a ton, extending a stretch of volatility that we've seen for the commodity. And a lot of this is largely due to deepening anxiety over demand in China. Base metals also broadly falling. And a lot of this, again, is because of this construction activity in China and whether or not investors are really convinced that it's actually going to pick up. So that's just a quick check at commodities this morning. All right, let's check in, though, on how markets in Asia are faring. Avril Hong is standing by in our Singapore studio. Hey, Avril.
Hey, Jen. Yeah, it's cautious among equities as well as we head into the end of the quarter. And Kieran Calder of UBP raises a good point. If you look at the stock indices that are underperforming today, they're really the ones that have been outperforming for much of this quarter. So it gives you a sense of how perhaps for the TAIEX as well as the Nikkei, investors are looking for fresh catalysts. The Kospi is an outlier today. We're seeing it rising along with the local chip stocks. Let's take a look at what we're seeing in the FX space. The yuan has been in focus, as has the Japanese currency, and we're seeing that renminbi divergence offshore and onshore moving different directions despite what we got from the PBOC with that strong fix today coming in and sending the signal that it's not ready to let the Chinese currency weaken. Regardless, we see how traders don't seem terribly convinced by the messaging, especially after getting spooked last Friday. Japanese currency, we've heard from the likes of Mito Kotecha, they say that for intervention, it not just has to be about the levels and also the velocity of the moves on the Japanese currency. If we see something past 155, 160, that's when we could see more aggressive moves from Japanese officials, guys.
Avril, thank you so much. That is Avril Hong in Singapore. The Africa Finance Corporation has secured a loan of more than $1 billion from a syndication of banks from the Middle East, Europe and Asia. The Pan-African financial institution says the funds will be used for infrastructure projects across the continent. Let's bring in now Samaila Zubairu. He's the CEO and president of the Africa Finance Corporation and joins us in Dubai. So thanks for joining. How do you plan to deploy this $1 billion?
So we have a range of projects in the energy space. We're focused on energy transition. We have a range of projects in transport and logistics. We have a range of projects for energy transition. So you see, Africa has significant reserves of minerals and metals for the energy transition. It also has abundant renewable energy sources. So Africa provides the least carbon-intensive part for the energy transition. So if you look at the fact that we have significant battery value minerals on the continent, we have significant hydro sources, significant solar sources, significant wind sources. If I recall correctly, we have almost 9,000 gigawatts of wind sources, about 5,000 gigawatts of hydro, and I think about almost 500 gigawatts of wind as well. So all of these resources means that Africa has significant renewable energy sources to process the minerals and metals that are required for the energy transition. We also are building several landmark infrastructure projects across the continent. We are focused on import substitution. We are focused on value addition. We are focused on projects that will accelerate growth, essentially build the infrastructure that will enable industrialization to take place on the continent to create jobs for the fast-growing youths on the continent.
Mm-hmm. And Samaila, this is Jennifer in Johannesburg. Thanks for joining us. So let's just dig into some of these projects because, as you mentioned, a lot in the energy space, there are so many needs across the continent. So give us a little bit more context, if you can, about where you're focused and what's actually in development.
Yeah, so Jen asking for a little more context on where those projects are focused across the continent.
Okay, so essentially we have projects in North Africa. We have wind and solar farms that we're developing there in partnership with our partners, Infinity Energy, actually a partnership with Infinity Energy, Master and European Bank for Reconstruction and Development. In South Africa, we have recently appointed lead developers for the Lobito corridor. There again, we're in partnership with the US government, the European Union, the government of South Africa, the governments of Zambia, Democratic Republic of Congo, and Angola. We're building the Lobito 2 corridor. Essentially, that is a corridor that would diversify supply chains for critical minerals for batteries. We also have several wind farms, several projects, several industrial parks focused on transformation across various value chains in Benin Republic, in Togo, in Chad, in Nigeria, in DRC, as well as in Cote d'Ivoire.
And just on those industrial projects and also ports, 10 ports as well that were due to be completed by 2025, where are you on that project?
So, I mean, we have a port in Cote d'Ivoire that we have recently launched, but we're doing the second upgrade of the ports to meet the huge traffic demand from that port. We have the port in Nouakchott in Mauritania that we are focused on. Right now, the port is complete. We're trying to get additional transport volumes and cargoes into the port. We have the port in Gabon, the mineral port, the general cargo port, all in operation. And then we have new projects under development in Nigeria, the Badagry port, and several other landmark projects across the continent.
Samaila, this is Jennifer again. I'm hoping you can hear me this time around. So as we mentioned at the top,
yes,
this
Jennifer,
is a record, amazing. This is a record amount of funding for the AFC. Would you, and I was reading that you guys were actually oversubscribed, so you increased the amount of funds that you were set to raise. Is there a plan to continue raising even more funds? Is that in discussion?
Certainly. We actually tried to raise $1 billion, but we had over 49% oversubscription. So we upsized the facility to $1.16 billion. We've got significant support from our traditional relationship banks like First Abu Dhabi Bank, Mashreq Bank, MUFG, Standard Chartered Bank that acted as global coordinators. We also have Mashreq Bank. We have Abu Dhabi Commercial Bank. We have Emirates MBD Bank. We have the ICBC. We have Mizoho, SMBC, and several others. We actually got new banks on this syndicate. We got Societe Generale Bank, we got Bank Muscat, and we got Intesa Bank San Polo out of Luxembourg, all new lenders. In fact, we actually had some of our traditional supporters of our Eurobonds come in as lenders as well. We had the Bank of China on this as well. So this is really a continuation of our fund drives across the continent. You know, we recently got funding support from the U.S. Development Finance Corporation, just like we have traditional support from France, AFD and Proparco, Germany's DEG, Netherlands, FMO. All of these are banks that have supported our business. Africa has significant demand for infrastructure, and all of this funding go to help us build the critical infrastructure that is required to spur growth on the continent.
Where are you focusing in on where the capital is being deployed, though? I mean, how are you assessing which countries, which governments, which projects actually get assessed?
So we have 43 African countries as member states. We also have the largest economies as members of AFC, and we are focused on energy. We're focused on transport and logistics, heavy industries, natural resources, telecoms and technology. We have allocations for various countries based on their GDP and the infrastructure need in those countries. So depending on where the opportunity comes from, we're open to do business all across Africa. Like I mentioned earlier, we're focused on the energy transition. We're focused on responsible mining. We're focused on mining of battery value minerals. We're focused on building the corridors that will allow for these minerals to be developed. We are focused on building the infrastructure that will enable industrialization to take place on the continent. We are focused on value chains. We are focused on value addition. We are focused on value capture. We are focused on job creation across the continent. You know, we feel that Africa has a lot to offer to the world. If you check the fact that all the studies indicate that growth has generally slowed down across the globe, we think that Africa is a good opportunity for growth across the world, especially in relation to the energy transition. Like I mentioned, Africa has significant minerals and metals that are required for the energy transition. Africa has significant minerals and metals for all forms of emissions control. So there are significant opportunities that will catalyze growth across the world from Africa.
But Samaila, a lot of the concern in the past has been that there hasn't been a continuity of government, and therefore a lot of these projects get dropped and not finished, and that's been the criticism in the past. I mean, how do you ensure, especially in a year where we're seeing a number of elections across the continent, that these projects are actually going to be finished?
So we don't have that experience. There's no project that, we have several projects that we have commenced and have completed. As you know, infrastructure projects take time, which is why we focus on developing to de-risk the opportunities, making sure that we're working with the right partners, and making sure that we have projects that will finish. So when we're looking at projects, we typically envisage working with 2 to 3 governments in the life of the project. So we plan the projects very diligently to ensure that it will pass the muster of successive governments. So typically infrastructure projects is 15 to 20 years. So definitely you're going to go through several regimes. So the secret sauce is in planning for change and planning to work with different actors over time. So if you plan properly, you make sure that you invest the right amount for the development, and you de-risk the project will continue. We have very few cases of projects that were embarked upon that didn't continue. And this is looking at starting the projects very early on, taking development risk with the partners and the government. So we typically have very high success rate. We don't have projects that have gone off. Some don't do well. So there's some projects that we don't get all the returns we expect. That is typical. And there's some projects that we get far beyond what we expect. So it's a balance. But on average, most projects come to completion with the right planning and the right approach and the right diligence.
All right, we have to leave it there. Samaila Zubairu, the CEO and president of the Africa Finance Corporation, joining us there in Dubai with this new news this morning. Samaila, always great to have you on the show. Thanks so much. All right, plenty more still ahead. Stick with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Cocoa has exceeded $9,000 for the first time ever as global supply shortages grip the market and chocolate makers grapple for beans. Yesterday alone, futures gained $700 per ton, climbing for a 4th straight day. Take a look at that chart. Wow. So for more on this, we are joined by Bloomberg's Ndiro Oganga, who is joining us, of course, from Johannesburg this morning. So Ndiro, just walk us through what is really driving these historically high prices.
Mm-hmm. The market has been hit by record high shortage of cocoa beans. Take Ghana, for example. They will record between 650,000 to 700,000 tons this year, 2023-2024, down from the projected 850,000 tons. Ivory Coast has also said they're expecting shrinkage during the mid-crop season, and this is what the market was hoping for to ease that crunch. A couple of things could explain this shortage, one of them being climate change. There was delay in rainfall, and when they came, it was too heavy, flooding majority of cocoa farms. Ghana has also been having challenges with regards to financing, and so the government was not able to adequately subsidize fertilizer. Internationally, we are also seeing there are new rules incoming in Europe which will block cocoa that destroys forests and has child labor in the cocoa production value chain from hitting the market. So we are likely to see cocoa prices continue to rise. Bad for the pocket, but good for the waistline, as Lizzie Baden says.
Ndiro, what do those changes in the international markets mean for Ghana?
It's not good news at all for Ghana because we are seeing that revenue from cocoa has dropped by a third to about 508.4 million. And this is because despite the prices of cocoa beans rising internationally, production in Ghana has significantly reduced. What this actually means is that because cocoa is the 3rd highest FX earner in Ghana, if FX inflows go down, then we're likely to see external payments suffer. This in turn puts the cedi at risk. And we're talking about a currency that has lost 8.3% of its value to the dollar this year alone. And this puts inflation at such a risk because the government has worked really hard to bring it down to about 23%. Another effect that we are seeing is that now factories are operating intermittently. When they have beans, they open. When they don't, they close. And it's only a matter of time before we begin recording job losses.
Bloomberg's Indira Ogaga. Indira, thank you so much for that update. And Vani, as Indira was saying, I mean, this really affects everybody throughout the value chain. Yesterday, we were actually speaking with a researcher who's been looking at cocoa for about 30, 40 years. He's saying that he's never seen it as bad as it is now. And despite the high prices that we're seeing, it's not trickling down to the farmers. And so the question really is going to be whether or not we actually see some of these governments actually step in and start passing it down to a lot of these smallholder farmers while they're still reaping a lot of the benefits from high prices.
Right, because, you know, the one good thing about paying more for chocolate, you think, right, is that at some point it will trickle down to the people who need it most, who are the people that farm it. It's fine if prices are going through the roof, if it really does benefit some of these poorer nations, these poorer countries, but it seems like it's the exact opposite that's happening and may even be hurting them in many respects. So, yeah, it's to be seen, but certainly those high prices are not going anywhere anytime soon. And we'll obviously see demand continue to meet supply because, as you know, Jen, you know, there's a big chocolate holiday coming soon, right?
Yeah, but I think I have a cap on how much I would spend on chocolate. But, you know, if it's trickling down to the people who are actually cultivating a lot of this and cocoa, yeah, of course. Do you not, Vani? But, you know, we'll have to see whether or not consumers, and this was something that the researcher yesterday actually brought up to us. He thinks that consumers are going to start being priced out of just how much they're going to spend. But, of course, as you mentioned, Easter is a big holiday for chocolate itself, but cocoa bigger than just chocolate. Anyway, so cocoa's record-breaking surge is actually the main focus of our next episode of Bloomberg Africa Amplified. We're going to continue to take an in-depth look at what's behind the cocoa shortages and why there could be a full-blown chocolate supply crisis. That is Africa Amplified. It's the first Friday of every month. The next one is Friday, April 5th at 6:30 a.m. Johannesburg time, 8:30 a.m. Dubai time. Stick with us. All right, plenty more still ahead. This is Bloomberg. Welcome back to Bloomberg Daybreak Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. SpaceX's Starlink touts its high-speed internet as available almost anywhere on Earth. But its effectiveness as a communications tool is making the satellite internet service a target for a growing black market trade around the world. Let's get more from Bloomberg's Loni Prinsloo, who is one of the authors of the Bloomberg Big Take this morning. So, Loni, let's just talk about what's actually behind the growing black market for Starlink. Dig into that for us.
Okay, so yes, Jen, it is, as you said, it's the effectiveness of this tool that's making it really popular. It's making a target for a black market. So what we are seeing is the increased trade of these kits across countries, into countries with repressive governments, into the hands of paramilitary groups, even a highly sanctioned internet, countries with highly sanctioned internet, or just a lack of internet.
Loni, where is it taking off?
So what we are seeing is the illegal use of it is taking off in countries where it's not approved currently by the governments because of data concerns or security concerns. But what we are also seeing is in Sudan, for instance, we saw that where the internet has been cut for ordinary citizens for months now, we saw the kits come over the border and being used by paramilitary groups. We're also seeing, we saw in the Ukraine-Russia war, we saw both sides using this kit. First Ukraine, and then, of course, we saw the images of Russian soldiers sort of taking out these kits and using them, to which Musk said they haven't sold directly or indirectly the kits to Russia. He's also sort of assured, SpaceX has assured Israeli officials that they can geolocate these terminals and cut them off individually when used illegally. But, of course, we are still seeing some bad actors using these kits.
Is there anything that Starlink is trying to do, Loni, to really curb the growth of this?
So what we've done is we've spoken to some of the distributors of these kits, and what they do is they are able to verify customers, and they try and stop the sale or cancel the sale when the customer is not verified, or when they see the large-scale sort of traders sort of taking these kits. But ultimately, as you said, the buck stops with Starlink, and they do say that they can cut off the kits when used illegally, but we have not seen that much of it. And yeah, so we do see these different groups sort of still using the kits and having use of the kits. So yeah.
Bloomberg's Loni Prinsloo joining us here in Johannesburg. Loni, thank you so much for that report, and you should definitely take a look at her story that is out there right now. Vonnie?
Exactly. Well, Jen, let's take a quick look at futures now as we prep for the big trading day ahead. It is the Tuesday trading session in a holiday-shortened week in which we're waiting for US PCE data. So all of that to digest. S&P futures, Nasdaq 100 futures, Dow futures all pointed higher. Not so much for the Euro Stoxx 50, but that could change. We're not quite at the open yet. Do stay with us, though. Tom McKenzie and crew will be taking you through those hours. For myself in Dubai and Jen Zabasaja in Johannesburg, thanks for watching.